As we mentioned in the previous episode of Market Journal, the USDA's updated financial forecast for 2016 dropped U.S. net farm income to its lowest level since 2009. While receipts from crops are expected to be close to 2015, the agency sees a bigger shock coming to livestock sectors. It projects receipts from cattle and calves will be 15% lower, and those from hog production will slide 7%. At last week's Market Journal Roadshow events, Tina Barrett from Nebraska Farm Business Inc. discussed how producers could better position themselves during the downturn. We talked with her at Nebraska Innovation Campus in Lincoln and began by asking how current conditions are affecting debt, cost of family living, and overall net worth.
Net worth is something that we built a lot of over the last few years with a lot of profitability on average anyway. And so that's a nice bright spot, is that there's a lot of equity on balance sheets right now.
What's the downhill slope look like for net farm income?
It's a pretty steep decline, but we got to remember we started at unprecedented levels. So, it's hard to look at where we're at going, oh, this was awful compared to 4 years ago, but where we were 4 years ago was unbelievable. And so you gotta kind of take that in with a grain of salt too, and understanding that this isn't that different than it was 15, 20 years ago.
How has that then affected debt levels on the farm?
Okay, so debt, is funny because, we went through this nice long profitability time where you'd think debt was going down and we were getting in a healthier position. And in the reality, we more than doubled debt. So from a debt to asset standpoint, we're still doing well, which means we've built a lot of assets as well. But each acre of ground is covering twice as much debt as it was 10 years ago now. And so from a risk factor, it's considerably higher.
In retrospect, was there anything that could have been done differently to make the situation different?
Well, I think the thing that was really tough, and it's always tough for producers, is wanting to pay taxes. But when we really think about principal being a non-deductible expense, we have got to have taxable income high enough to cover family living and income taxes, which again are not deductible, and principal payments that we want to make. And it's a hard concept to think that we got to pay taxes to reduce debt, because it doesn't make sense to spend money to have less to pay down. But we really have to think about that. And now that it's tough is that we've done so much tax deferral over the last few years, didn't pay tax when we were making money, now we don't have cash, and we really need to pay taxes.
Tell me about the trends in family living.
Yeah, so actually I can say that family living is down over the last few years. Has been
Congratulations.
Down. Yeah, yay, it's good news. But the reality is it's $92,000, and that's down from $99,000, but still more than double what it was 10 years ago. And just to kind of give a little perspective on what $92,000 of family living means is, I went backwards to figure what kind of salary it would take to have a take-home check of $92,000, and I put in a 5% to retirement and $1,000 a month for a mortgage or car payment. And you need a $160,000 a year salary. So I think that kind of is like oh man, understanding that the average operation out there is living way beyond what most jobs would pay in rural Nebraska.
Let's flip to looking at this year. So 2017 growing season, as you start to look at costs of production, tell me what they look like.
Yeah, it's pretty tough, right? We're not in the market of what the cash market's paying right now. It's just on average, just not there. Now, I do have some producers who are producing at levels below cash prices right now. So, we've got guys who are making money, and that's good. It's just tough to figure out from an individual operation standpoint where you're at, because average doesn't make it, which means half of them are way out and half of them might be in the money. So you need to know where you're at, so that you can know if you need to be making adjustments quickly or if you can be sitting and kind of hanging onto your seat through this.
Why is there so much variability?
Well, there's a lot of difference in managers out there, and I think a lot of times producers think that they are all in the same boat and everybody's doing the same thing because we're dealing with so much the same. But the reality is there's a lot of decisions that they make every day, and they choose which seed company to use, they're choosing how much fertilizer to apply, they're choosing all the little things that go along with the operation. And for those who focus on making those good decisions on a daily basis, which is hard because it's a discipline thing, that we can really see a big difference in total costs. Sometimes it's a matter of having a great setup that you come in. Some producers certainly have a longer family history, maybe ground that's paid for, favorable cash rents that maybe their neighbor doesn't have. And so sometimes that's the difference. But I really see a difference even in brothers who have the same setup. and their cost production might be 30 or 40 cents different because of those little decisions that they're making.
Those producers you mentioned that could be making a profit this year, what sets them apart from the other group?
You know, I think it's an attention to those details. It's paying attention to the numbers. A lot of producers don't want to think about their farm as a business. It's more of a lifestyle. And when you take the time to really look at those numbers and react to what those numbers are telling you, you can make good decisions. So, you know, think about if you had a cash flow that had a positive, the 100,000, that might feel like, oh, it got some wiggle room, no problem. We can play with some of this money. But if it was a negative 100,000 and you knew that, then you think, oh, I don't think I need that $50 tool, or I don't need, you know, to upgrade the tractor this year. And so having that knowledge really gives you the power to make better decisions.